Hello everyone and welcome into the channel. My name is Brent, and in today's video we're going to go ahead and be taking a look at the Fear and Greed Index. We'll take a look at some of the recent tariff announcements and news as of Friday through the weekend, some back and forth banter right between the US and China. We'll go ahead and take a look at last week Friday's differences in the indexes, with the S&P 500, NASDAQ both being very positive green, whereas the Dow Jones was kind of in that 0%, right? We'll also take a look at the dollar, some of the reasons the dollar is sitting at a 3-year low. We'll look at current mortgage rates and end it with the final decision of this week, which is kind of the earnings, right? Earnings, there's going to be some big earnings coming out Wednesday, Thursday. So we'll go ahead and take a look at the companies going out that'll mostly affect the market, whether this will be a pivoting point to the upside or downside. And then we'll kind of finish it off looking with what ChatGPT brought up with an analysis of the S&P 500. I fed it a chart, said, hey, let me know, what do you think the market will do? And I'll go ahead and share that with you guys. So with that said, if you guys are brand new here to the channel, definitely go down below. I'd really appreciate it. Give this video a big old thumbs up, and let's go ahead and get into it. So last week's video, we were in extreme fear territory as the market was sitting, or the fear and greed indicator was sitting at roughly a 21 or 23. It has definitely decreased here with less fear being out there in the market. We're sitting at now at 35. A lot of this is due to the market being able to breathe. The market volatility has definitely came down, but another one is the stock price breath, right? Definitely been less selling pressure. Investors have been more actively buying and selling. It's been less selling versus buying. So they're looking at the amount that's being traded, the volume, and then the number of shares, right? And this has all been on the decreasing end, showing that the bearish signal was less of a bearish signal, and there's less fear and a bit more greed out there. Investors are more likely to be buying into the market than fear selling into the market. So there's a less signal of fear. Also, volatility has continued to be on the decline, as we've seen the daily movements being less volatile. We're not seeing those days of losing 2 to 5% on a daily basis and being down for the week 5 or 10%. That has pretty much stopped as of the past two or so weeks now, right? As that low bottoming out point was put into the market. We did see some discussions between the US and China continue to go back and forth on whether something was true or not. Trump says that there's talks underway. China has said that is completely not true. Trump has said that there has, in the next 3 to 4 weeks, they'll have 200 deals that'll be completed. And, no one can argue against that one. And there has been some waiving of tariffs for pharmaceuticals. So I did highlight a few areas here down below. So the main highlight here was that reporters came up to President Trump on Friday asking about how are negotiations going with China. And Trump had told them that there are discussions being taken place between Chinese president and himself. But it was later, as he was leaving for Rome on Friday. But then China came back and said, no, that's clearly not what's happening. There's no consultation. There's no negotiations going on. And that was all posted, right? The U.S. should stop creating confusion. That's what the article of the here is called, conflicting U.S. and China talk statements add to global trade confusion. And that's what's kind of going on out there right now in the market. We don't know which side to believe. Obviously, if one side says that it's coming to an agreement, but the other side says like, hey, yeah, we don't have anybody coming to an agreement or really talking about this, then I'm going to just say that it's still, the uncertainty is still out there. So we can still definitely have some up and down movement due to that. And, the back and forth adds to the substantial uncertainty surrounding Trump's erratic tariff policy, not just around China, but also as it pertains to dozens and dozens of countries scrambling to strike back their own deals to ease the burden of the hefty import tax that is unleashed since returning to the White House in January, right? There was some really heavy tariff pushed on many countries out there, but they have that 90-day leniency as they have time to make an agreement. So a lot of countries are looking to scramble and get those agreements in place. Now, the big one that everyone is kind of looking forward to is China one. I think I highlighted something else down here. Oh, yeah. So right, they're still making some leeway. China has exempted some U.S. imports from steep tariffs as business groups said Beijing has allowed some U.S.-made pharmaceuticals to enter the country without paying that 125% tariff that Beijing imposed earlier this month, right? As Trump went up to 45 to 100 to 145, China also went up, 45, 90, 125%. So there are definitely, I'm going to consider this kind of like some agreement, right? They obviously need things from the US. We need things from China. Eventually, they're going to have to strike a deal that's going to help de escalate this situation and make it from uncertainty to certain. And there's going to be some things that'll be exempted, but I'm sure, in the end, they're going to want to defuse this tension with China. So they could still be a couple months ahead. We could still see this for the next few months. I didn't think I highlighted anything else in here, but as far as timeline goes, this could continue to go on for anywhere from like a week to a couple weeks to 3 months out there, right? and even longer. Taking a look at Friday's change, we saw that there was a big difference between the S&P, the Nasdaq, and that Dow Jones. The Dow Jones was essentially flat on the day, moving up at 0.5%, whereas the Nasdaq moved up a whopping 1.26%, and the S&P 500 moved up 0.74%. Now we look at the heat map over here and we zoom into it. We can really see why that happened. On the one day on Friday, we see the Mag 7 being very positive in the day. Tesla up nearly 10%, putting that Nasdaq higher than the S&P, right? We saw that Nasdaq nearly double the S&P 500, nearly, but not quite, but still 10% on a gain of Tesla, even though they missed earnings, right? Google did really well with the earnings, but nearly went up 1.4. I think it was 2% on the day of earnings. Friday, they're up 1.47. Meta up 2.65. Meta is going to the earnings this week, I think on Wednesday. Amazon is this week upcoming on earnings. Apple is upcoming on earnings. Microsoft is upcoming on earnings. But we saw the big difference there between the Dow Jones being very flat is because majority of the market was essentially mixed. It was very red or flat or just very little to the upside. Versus these Mag 7s, these tech companies here really pushed the S&P 500 up 0.75 and the Nasdaq at 1.25%. And also, the US dollar is sitting at a 3-year low, but this could kind of begin to turn around as some recent news here. We did see that over the past 3 years, the dollar has essentially kind of been above that $100 point. Well, as of January, it fell from $109.65 to sitting at a 3-year low of $99.64. This comes as President Trump has been threatening the Federal Reserve and the flyer Jerome Powell, right? That's been kind of shaking up investor confidence and also shaking up the overall confidence of the US dollar as that reserve currency. So the US dollar continued to slide on Monday, falling to its lowest level since 2002 as global investors retreat from the US assets in the face of tension between President Donald Trump and the Federal Reserve, right? But I believe there was a little bit of a pullback on Friday or Thursday talking about how there will not, President Trump is not looking to fire him any longer. I think was the last the last chatter here that I remember kind of seeing was that they're not going to try and remove him from the central bank chief, but we have, because of the whole, they wanted to have the rates cut, but that's not taking place, right? We did see interest rates still dip down this past week. As we saw on Monday, the current average interest rate for the 30-year benchmark actually fell 1 basis point from a week ago. We also saw that homeowners that are looking to refinance also had their interest rates fall down by 4 basis points. It's been kind of ticking down a bit from January. Mid-January, kind of hit those highs of 7.11% for national. It has been on the decrease right up until what, April 11th, I think it was, and then we saw that 10-year Treasury note just very much spike high. I didn't see it was nearly at a 4% on the 10-year before spiking up to a 4.5. So that really kind of shocked. I was getting a ton of emails and text messages on a daily basis saying, "Hey, rates have came down. Rates have came down. They're new at a kind of low for the 2025." And then boom, everything kind of spiked up, and I stopped getting those text messages. So it's just interesting to see current mortgage rates. I was doing the math. If you guys do the math on your guys' mortgage rate, mortgage on your home, I took a calculator and estimated. I have an interest rate, a mortgage rate of 2.7%, 2.75% that I locked in back in 2021. And if I took that same amount, I bought that same house for that same price, I put that same percentage down towards the buying price. If I had a rate of 2.75, I pay a monthly mortgage of around 1660. If I put in the same exact calculator and put the current mortgage rate of 6.15%, the mortgage per month increases over $700 difference in just a monthly basis, and over a yearly time frame it comes up to $9,000 difference, and then over the time of the loan of 30 years it comes up to roughly $250,000 difference. I thought that was a huge huge change. A lot of investors in my market are not wanting to sell their homes. I've seen a lot of comments of that if it wasn't for that 2.25, that 2.75% interest rate, that they would be trying to move to different places. But that interest rate that they have really kind of locks them into their homes. So I thought that was been kind of an interesting chatter. On Monday, there's not going to be a whole lot that I was watching as far as earnings go. So we're going to be taking a look at now at the earnings calculator. I did see waste management. This is one I did hold in my portfolio up until this year before selling it off and moving mostly or 100% mostly into VU within the M1 Finance portfolio. Tuesday we did have Visa, Coca-Cola, and a couple of the Pfizer, right? We had pharmaceuticals down here as well. I'm going to be taking a look mostly at Wednesday. Wednesday's going to have those big heavy hitters. We have Microsoft earnings coming out Wednesday, Meta earnings coming out, Qualcomm as well, and in the day. So I'll definitely be looking forward to Wednesday's market movement. I'm looking forward to Meta. I did sell out the majority of my Apple as my individual holding and moved it over to, as far as individual holdings go, Apple had been my biggest individual holding, and that has now been transitioned to Meta. Now I'm still holding the majority of ETFs, right, that track the S&P 500, like VU, SPY, or SPYI. Those are the biggest portions of my portfolio. But when it comes to those individual companies out there, Meta is probably the biggest in the portfolio. So I'll be definitely looking forward to Meta there. Thursday, we have Amazon and Apple that are going to be coming out in the morning portion. So here, I think it's the morning, after hours there. So after the market is closed, let's take a look really quickly. So after hours, Microsoft, Meta, Qualcomm, we'll see in the market, right? The market will close, and then it'll open up either pretty positive the next day on Thursday, or pretty positive, or pretty negative, right? Anything can happen. On Friday, it kind of decreases once again. We did see Berkshire will be doing their earnings here on Friday. But outside of that, I'm really looking forward to Wednesday for Microsoft and Meta, and Thursday for Apple and Amazon. These will kind of play a pivotal role in whether the market continues to trend higher from here, break above that 50-day moving average, right? It's going to act as resistance. That not so much the 50-day, but that 200-day is going to be acting as resistance. We're going to hit that 273 with earnings, and we will either hit it and retrace back down, or we'll hit it and break above it and close. So this will be kind of a pivotal point here in the market. So I'm kind of looking forward to that. As we said, Apple earnings are coming up here. Apple's still been sitting on that good recovery, so kind of the same thing here. these earnings are going to play a pivotal role on whether or not Apple will recover and break above that 50 or that 200-day moving average, or will retrace back down to these lows. Microsoft here, Microsoft had been on this downtrend for the longest time. Actually had a death cross in February. As we kind of mentioned, there was no end in sight for its downwards trend. Microsoft has been downtrending since July of 2024 when it fell from these all-time highs and has been on a bit of a downward slope, right? Apple, not so much. Apple had been doing really well up until this tariff news and chatter, and then it kind of decreased, right? It did have that death cross here, so there's still a lot of negative indicators within these companies. Amazon's not, them included. So these earnings are going to play a pivotal role in whether the market will move higher, right? These are kind of the deciding companies. Apple, Microsoft, Amazon, Meta, they will be deciding companies of whether the market will recover and move forward this week, or we will fall into those negative lows again, right? Especially with tariffs beginning to continue to be uncertain. And then we have earnings that come up as well. So we did see Google already had their earnings, and they've been mostly positive. They will more than likely continue to trend higher and test that 200-day moving average. We'll see if it hits it and retraces. There'll be an early indicator as to what happens with the other ones, I believe. If they have good earnings, so Apple, Microsoft, Amazon, and Meta, if these companies have good earnings, and Google is that early indicator of they hit that 200-day moving average and they broke above it and closed, that could be a good indicator for these other companies that if they have good earnings, they begin to kind of move higher. That'll be a good sign that these will potentially break above that 200-day moving average and continue moving higher. Now, I did take this image here. I uploaded over the ChatGPT and I said, hey, analyze this image of the S&P 500. Tell me which chart pattern, I misspelled that, is best match, whether it's bullish or bearish, and give me examples and images. So it took a look at the purple, the blue, and the orange line indicators. So the SPY price is trading above its 50-day moving average, which is not true because SPY price was trading above its 50 and 200-day moving averages in earlier 2025. Around March 2025, it broke below both the 50 and 200-day moving averages. Afterwards, that price fell sharply, sharp vertical drops, and is now struggling to recover and still below both averages. Now, technical patterns, right? This is what I was kind of showing you guys as 3 technical patterns. So the first one, as we mentioned, is that death cross that took place. So the 50-day moving average is declining and approaching a cross below the 200-day moving average, which is a textbook bearish signal. So anytime you have this 50-day that crosses under that 200-day, it has generally been a sign that the market has either bottomed, let's go look at the 5-year, has either bottomed or will continue moving to the downtrend, right? Here's that 50-day, that blue, that moved under that 200-day, and up ahead of it, it still had a long time ahead of it before finally it crossed back over, blue was on top, and the market recovered. If you take a look at the 10-year here, I'm going to try and maybe there's a better example here. I could probably look at the S&P 500. It'll probably be a lot better than the individual companies. And here we can take a look here. S&P 500, the blue crossed under that 200-day moving average, and it dipped, but it did quickly recover soon after, right? That was back in I think it was late 2019. 2020, we knew it kind of took place there. That 200-day cross under the 50-day cross underneath the 200-day, that market fell, but again, it quickly recovered. Now, back in early 2022, that death cross took place. It did not quickly recover from that point. It continued to bleed off up until I believe it was October, where finally the market had trended sideways from February until October. So 8 months, essentially, the market was going up and down in this pattern, and eventually in October began to finally make changes to the upside in late 2023. So we don't know, eventually we'll kind of get a better signal here whether the market, if this is that bottom, right? Here is the bottom of the market, and here's our recovery, or will earnings be really bad? Will tariffs continue to be negative and continue to move forward. Other indicators that match are the bear flag, the sharp drop is the flagpole, with the weak upward draft is the flag. This typically resolves lower, so this is a moderate match, and the descending channel. So right now we're kind of in a channel. So a series of lower highs and lower lows, which is a bearish trend continuation, which is all three negative patterns. Even if it's not the death cross, even if it's not the bear flag, even if it's not the descending channel, I mean, it's one of them, right? It's all of them. And they're all three very bearish indicators. Here's a quick summary, as it kind of said already. And here's, it said, hey, would you like me to mock up an example of the possible next move projection chart that could look like based on these patterns? So here is your upcoming potential move. So the death cross forming is a strong bearish sign. The second pattern is a bear flag developing after a sharp drop, descending channel continuation, and the outlook. And lastly, SPY strongly recovers and breaks above that 562, 573. It remains bearish. Further downside is more probable based on the current setup. And then, yeah. So it really depends on the current market. As I said, these earnings this week are going to play a pivotal role in whether the market will move higher, close above that 200-day moving average, and continue to move higher, right? It will need to quickly move to the upside to kind of recover. If the market, if the US and China can come to an agreement within the next, say, I'm going to say a month or so, and if the earnings that come up this week with Meta, Amazon, Microsoft, and what was the other one? Google already had it. It was, where's my earnings? Microsoft, Meta, Apple, and Amazon. If these earnings can be positive, and then I'm going to be watching Google. Google is going to be kind of my watchdog right now to kind of see what takes place this week with earnings. It's going to, move above its 50-day moving average, but I want to see what takes place as it gets closer to its 200-day. Will it hit it and retract, or will it hit it and close above, making more of a bullish signal for Google? Let me know down in the comment section below, what are you guys' thoughts on the market as a whole? Do you think the market will move higher from this point on? Do you think the market will move lower from this point on? Are you guys invested in any of the Magnificent Seven individually, or are you invested in something that tracks the S&P 500 or another ETF such as VI or something else, right? So I think that's going to be it for today's video. If you guys have any comments or questions for me, let me know down in the comment section down below. Otherwise, I really do appreciate everyone who has turned into this video. I would really appreciate it if you guys subscribe, if you guys stayed up until this point, and give this video a big old thumbs up. I will talk to you guys in the next video. I hope everything goes well for you guys this week, and I'll see you guys in the next one. Bye-bye.